All right. Good morning. Good morning, everybody. So we're mostly green on the screen around the world. The US is trying to play catch up this morning. Hong Kong is up the most. And really, we would consider this more flat than up, right? It's my benchmark is a 0.5%. And for a while, I was even considering bumping that up to a 1% as a benchmark. So seeing them down, around 25% or up 25% like we have this morning, that's a negligible amount, right? It's a small amount, barely counts at all. But when we start looking at how things went around the world, if we consider the markets that are closed versus the markets that are open, you got to figure less volume in the overnight or less volume after a market is closed. Hong Kong being up the most, and they closed a while back. Japan closed, right? So consider Asia first, Australia, then Asia, then Europe, then us. And looking at it, that's pretty close to what we have around the world, right? That progression from high to low. It's pretty light today when we consider the schedule. Let's do, yeah. Looking at the whole week, Monday's just nothing, right? If we're looking for something big enough to move markets, we got nothing for Monday. On Tuesday, maybe it gets a little better. We start getting closer into those job numbers that everybody's worried about. Looking for more data too, if that revision, that new way of getting the numbers actually comes through. Right? We don't know yet when that's going to happen, but the way that they get the numbers or the way that they calculate the numbers is changing soon. Start getting into ADP employment Wednesday, and make no mistake about it, jobs, jolts, ADP, non-farm payrolls, all of that is going to be a big deal this week, right? So everything to do with unemployment, which starts pretty early on Tuesday when we start getting data, job openings, all the way out to Friday for the non-farm payrolls. We're just not getting anything really today, right? This is the day of the reprieve. Yeah, this is Market Watch. I'm not logged in. I don't go here very often because, as you can see, they don't have everything listed. The thing about Market Watch, they only list like the highest anticipated events, and if there are none, like today, they don't even bother. As opposed to like FX Street, which has all of these for today. And someone who really pays attention to auctions, so yeah, that matters to me. I want to know what's here today, but that's why I don't normally show this. It's because they only show the ones that have a higher anticipated impact. Yeah, you're welcome. That's what we're here for. So we're climbing that wall of worry. The markets are barely up, but there's just a whole list of things around the world that has the market kind of sitting on pause, waiting for a narrative. And the catalyst that moves us higher or lower at this point, it doesn't have to be a big thing. In fact, it's not always, right? Most of the time, whatever the catalyst happens to be, it's usually something smaller. It's just a change in perspective, a change in narrative. They're still beating that drum of higher for longer. So we do have auctions today. The most important ones, although they all have weight, for me is going to be the 1 o'clock auction. So for you 0-day traders, once we get through 1 o'clock, you're pretty much good to go. You can see that the volume is really light. If you check what is open around the world or what didn't open in this case, I think you'd have a little more insight here. Remember, our benchmark is around 100. So when we come in and we see the volume this light, we would think that there's something in econ that everybody's waiting, like non-farm payroll day, everybody's waiting, or it's because a nation didn't open either due to a baking holiday or an election, something like that. So when the number is light, you kind of really want to know why. There's no market maker move this morning. So even if you hadn't already known that there were nations closed, you would at least be able to see that they're not really hedging. So they're not worried about an event, which would tie into a low volume. And we think that there's an event coming. All right, so that makes sense. We have an MDP at the moment. It's a missed daily pivot. We haven't hit it. It means we've missed it. But really, the count doesn't honestly help until tomorrow. I know that was throwing people off that I would talk about the missed daily pivot when really tomorrow is when it has weight. Either way, if you don't know what the connotation is for that, why it matters that it's a missed daily pivot, there's a strategy connected to it. I don't trade the strategy, but the understanding how that strategy functions means that we can use it for analysis, right? If that strategy says we should be going long, even if we don't take the trade long, we can still expect the market would be going up. Yeah. That. $10-day, 30-minute volume profile. As I mentioned last week, we're going to lose the top of this profile unless we happen to cross the cog line at 45.11, right? So unless we run back up there today, then tomorrow when we come into the morning briefing, this high here is going to be the high of the profile. And then when I say the phrase, when we're at the highs, we go to the lows. And when we're at the lows, we go to the highs. That'll make a lot more sense if we come in tomorrow and the top of the profile is at this pivot point, and it's going to look like, looking back, that we had hit that high and that we had fallen away from it. Just like it looks like we hit that high here and that we fell away from it, or that we hit that low here and we came up off of it. That's not true. Yeah, it's not what happened. The profile, that wasn't even the low of the time, right? Or that wasn't even the high of the time when we turned there. I'll continue to hammer on this until you grab a hold of it. You'll see it. One day it'll just be an aha moment. Okay, the VPOC from Friday, it was impressive within the first 20 minutes how we kept struggling with that VPOC and we just couldn't make it through there. But we did get through and take it off the board. Of course, a lot of people would have taken it off the board as soon as it got hit. I like to leave it on through the whole day just to see if price does respond to it again later on. And you can see how price did not respond to it, right? It just ran right through it like it wasn't even there. But at least it was an area where I was still under watch. I was still, watching that area for concern. And that way, if it had rejected there, it's not like I would have been, missing out, because I would have anticipated the rejection. So the fact that it didn't stop, it just kept on going, not a big deal. We have a new VPOC now, Fridays. So just get it close. It doesn't have to be, spot on perfect. It's actually a 1 tick channel, that red zone down there. So, or 2 ticks, excuse me. So unless you want to draw 2 lines or something, just catch it somewhere in the middle, call it good. It's not a big deal. You can see how the IB is just so very narrow, and the Globex with the really light trading volume is so narrow, right? That profile really puts it into perspective. But this is a really great trading opportunity because now you've got this nice clean zone, and we've got the expectation of the megaphone, right? So let's just start with that first 5-minute candle. That red box there is the first 5-minute candle. Make it dark enough to see it. And that's a really big 5-minute open. And just like with the megaphone pattern, we've expanded a little higher and a little lower, just enough to widen the box out a little bit. And that makes sense because liquidity resides on the other side of the pivot, right? So when this was the low, liquidity resided just a little farther, and that was the high. Liquidity was on the other side. So it's very likely we're going to continue to expand like this, just a little bit at a time, until finally something breaks. That's the key, right? Eventually something is going to break and price will go. But now we've got this really long, wide range, and the longer we're in this very tight, very narrow range, the more compressed, the more energy we get. So that when we do make a move, it's very likely going to be a pretty extreme move. Just keep in mind, I think we got a decent example here from Friday. It's not perfect. We had a small range that lasted like 4 or 5 hours. And when we finally broke out of that range, it was a fake break first, but then it kicked off this move. So we got it nice and clean. We're ready. Got a good opportunity. Just got to get out of this zone. The top side breakout will also give us that Friday's breakout. So there's no reason to get hung up on catching the perfect entry on this, right? You're not going to miss anything if you wait a little bit. Because if we do break out of Friday's high, we can very easily make 50% of that move or even 100% of that move. So you're looking at 44.61, and then getting probably an inside week breakout. We'll check to make sure. Yeah, it is inside week breakout, 44.93. So it gets us pretty close to 4,500. And all we need is to start that breakout process, right? So don't worry about the megaphone and getting chopped up as it expands liquidity on each side, as it begins to push those Bollingers out on each side, right? Because it's gonna work to stress that Bollinger on one side or the other. Don't worry about those fake outs. Let it get through that, and then you get your play. It's nearly 30 points wide. Surely you can get 10 or 12 points out of that 30 somewhere without having to worry about tops and bottoms. Just be careful as you get up into those 44.90 area, because you've got the 10-week moving average, and you've got last week's high, and then you've got the week before that, you got it's open. So that's a lot of pivot points all stacked up there. And then you've even got the close of the previous week. So 1, 2, 3, 4 different areas of interest all stacked on top of each other like that. It's going to be difficult to get through there, at least on the first pass, right? Which would be a really nice first touch play. Otherwise, while we're already looking at the weekly anyways, we can measure out last week's levels. We got 44.25 as the 50% mark, which is basically what we've been hitting all night, right? Really close to it. Let's go ahead and reflect those on the daily here. All right, so that's last week's 50% mark. It's going to be a significant pivot. And then the candle that's in control, there's its 50% mark, 44.33-ish, kind of round up, it'd be 44.34. So that's going to be a level of concern. Really not much to the downside. We do have last week's close, as much as that helps. A little bit of support, 44.13. But if we run it across, it's that whole area, right? That's a cog line, 44.11. So a minor pivot, some minor resistance, and then some real serious resistance. And we still have a gap that needs to be closed this morning. 44.13. All right, so nat gas is down, excuse me, nat gas is up the most, 3%. The VIX behind that, just remember we're in a new VIX. And then we've got the China ADRs, which you really want to proceed with caution. There was articles that were coming out about more China stimulus last week, which looked good. But if that's the only thing, right, is a little bit of stimulus and maybe a reflexive bounce, then it's just going to roll over still. All right, so we got BABA. We have a reasonably strong trend line underneath. We got that gap closed Thursday, which is about the only positive thing we have to say out of it. But if we look at the weekly chart, we're still under that 10. And then we closed on the week underneath that 50% mark. So now 90.66 is still the area of concern. And we're still fighting with, even in the pre-market this morning, we've still got the issue of the level that we're going to have to deal with, right? That 50% mark. So in the pre-market this morning, BABA's at 91 and a little bit of change. Now, as we go to fade back, this has us set up for a bounce on that 90.66 and a run towards that 94.45, 94.75 area. That's the goal, right? So we're not too far away from that. And we're now set up for a little bit of a bounce. We want to see that weakness as we come into the open, right? Because if it gets too out of control, like it is now, starts to look a little bit like a freight train. We can look at how it was on Wednesday into Thursday. We had the gap up, started to run like crazy, and then unsustained. So we want to see this kind of calm down. Maybe come down and bounce on that 90.66 and give us a springboard. One good thing about this, for BABA, we're already above all of this, right? We're sitting way up here. So even that highest point from last week, this is an inside week breakout. there's two things of note with this that make it really important is if we think about how this is going to look on the weekly chart. Last week, green candle closed higher than 50%. New week opens gapped up higher than the entire candle of last week. So at the end of this week, when we're looking back, if there was no fade here, if there was no gap close, this is going to look crazy super bullish, right? Looking back. So what we have to be worried about at this point are those fake outs where it gaps up and then it just dumps the rest of the time. And then this isn't a little gap up. This is a big gap up. So trying to find an example of that. Well, I guess this will be a good example. We closed down here and we opened here and continued to fall. All right, Baba's at 135, 136, basically. So we've got an inside day breakout. It's not quite outside the range of the previous week, though. It's got a little bit of work to do. Then we'll have an inside week breakout on Baba, but that's about, or Baidu, excuse me. That's about all we can say out of it. There's not much to focus on other than maybe getting that gap closed. And the options in here is really poor. So it doesn't make it a great choice either, but that's a gap that needs to be closed. 137.91. We could see that possibly. It's looking pretty thin though. So it's pretty much in all of them: JD, PDD, Neo, Baba, Baidu, and of course, looking into Neo, we can start checking on those EVs. Nikola's not looking that bad. Tesla looking like an inside week breakout already. It's testing up against last week's high. So if we can get above that 244, we could focus on getting the gap closed. No, we're past all that anyway. 242.81. Yeah, we're past that too. So Tesla's got a gap close that needs to be dealt with. What we want to see as we come into the open, that it deals with this somehow, whether it depending on how far up we get in the pre-market, whether it comes down and closes that gap truly in the RTH, or if it's just going to continue to run without managing that gap close. There's another gap that needs closed at 253.86. So even if we continue to go up, we got another one to deal with. And the 10-week. So getting through that call it 255 area this week is going to be pretty rough. It's doable. That's no mistake of that. In fact, if we continue to push the upside, that gap close will become a magnet, right? It's more of like predetermined at that point. It becomes a when, not if. So the EVs are looking good. The China ADRs are also looking good this morning. I mean, really nothing else up there that we'd want to mess with. Biotech, this isn't really the enough yet, but there's some pharma stocks getting hit with some talk of another strain on COVID. So mask news, some hospitals were masking up. This is starting to pick up a little bit more traction. Could see more biotech stock catching a bid maybe throughout the week this week, it's worth keeping your eye on, especially on the news side of things. Everything else is flat. We don't even really have a side that's down yet. It's just flat or up. All right, we got 10% of the NASDAQ up at least a 0.5%. And 4% of the S&P. So it's really a market on pause, waiting to price in a lot of news. So kind of keep this in mind as we get into the open today. As boring and as sleepy as it looks, we haven't priced in the news from the overnight, let alone from an entire weekend. And this is always a Monday issue. I know you see candles that moved all night and you think, surely all the news has been priced in, but it doesn't work that way. I'm talking about the people impact, right? The people that get into the office and start putting some work together. This news from the weekend hasn't been priced in. So as sleepy and as boring as this looks, as we get into the open, we're very likely still going to see anything that needs to be priced in coming through. And there hasn't been a head start. So kind of keep that in mind. Other than that, it's a boring, sleepy Monday. We need something catalyst wise to kick off. And at the moment, all we've got is a grind high. Be careful, be safe. I'll see you all tomorrow.